Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
So we're here for another episode of Kiss My Assets, and we have some news hot off of the press this morning to discuss about inflation, the CPI numbers, and we have Heather Andrews, who works in investor relations with me at Neighborhood Ventures. We also have a special guest, Mitchell Drake from ABI Multifamily. So he's a broker at ABI. He sees a lot that's happening in the multifamily market, so we wanted to pull him in here today, talk about some of the things he's seeing. So welcome. Thanks for joining us.
Thanks for having me, guys. Appreciate it.
So you graduated from ASU.
Yep.
About 5 years ago. You've been
About
at
5 years
ABI
ago.
ever since.
Took like a little hiatus for like 6 months, taught English abroad, and then came back to Phoenix and started working for John and his team over here. So yeah, we've got a nice thing going.
So we're going to learn more about Mitch and some of the things he's seeing in the market. But we've worked with him on several transactions, and he's very knowledgeable about what's happening in the market. So I'm excited to have him on and to join us.
Yeah, because
So
he gets to be smart and I get to be cute.
Exactly.
Yes.
This is the new format. I like it.
Balance each other out.
Yeah.
So the exciting news, I know everyone is so excited about this, but the CPI numbers came out today.
It's my favorite.
Isn't that awesome?
Oh, yeah. We were waiting for it.
So CPI is the Consumer Price Index. And the reason why this is a big deal right now is because everyone's trying to track how inflation is trending. Inflation's the big problem in our economy right now because inflation just increases the price of everything. And there's also this impact where one thing starts to increase in price. It's kind of like a tornado, and it just starts to pick up everything and move it up. And that is not a good thing because then it basically means that everything's going to cost more, so we might be making more money, but now everything that we're spending it on also costs more. And some things go crazy and get really expensive. Some things don't go up as much. And so it's not a good thing. And it especially impacts people at the low end of the economic spectrum, especially people on fixed income. You know, if you have a Social Security, that Social Security is not going up 10% a year. I think it's a fixed percent that it goes up every year, and it's much lower than what inflation is doing. So there's a lot of problems with inflation. The chairman of the Fed has said this is their number one priority, which it should be, is to decrease inflation, even if there's some economic pain. And what happened this morning is inflation numbers, or the CPI numbers, came out. They're increased 0.1% from the August numbers, so they're actually a little bit higher than last month. And now it looks like, based on this, the Fed's going to continue to increase rates at a pretty aggressive pace. The next time that they do that, next month, probably going to be a quarter point. So that just means interest rates are going to go up, which impacts a lot of things. It impacts what we purchase. It impacts apartment values when you go to resell the apartment, and it could impact your home if you're going to go resell the home. So any thoughts about inflation and what we saw this morning?
Yeah, I think, I guess just speaking at a local level here in regards to real estate, because that's obviously what I do. A lot of the local banks, regional lenders here, have already priced that in. So I don't think we're going to see prices change too dramatically. So I don't think we're going to see prices drop, is what I'm saying. And we've seen that even from the last rate hike. I think it went up another 75 basis points as well. And so things have been priced in for more or less 3 or 4 months. And so prices are going to more or less stay the same, probably drop a little bit. There's a little discrepancy of where sellers are at as far as, you know, what they'd like for their assets versus buyers and investors.
So tell us a little bit about that. How does that impact if you own an apartment building, or if you're looking to buy an apartment building? How does rates that are now more like 5.5%, 6% impact the psyche of the market compared to 6 months ago when they were 3%, 3.5%?
Yeah, it's just, I think it's it can be kind of a herd mentality. So guys that may have been interested in Phoenix, or I've got some cash, I've got capital that I'm ready to raise. They're talking to other investors out here, and they're seeing that they're holding off for obvious reasons. As interest rates go up, prices need to come down. If you're looking at that same fixed return, it just needs to happen. A way to offset that is by increasing rents, though, which we're seeing a lot of demand right now as far as rental rates. There's scarcity of housing. As far as investors go, good operators, they're going to be choosing their deals a little bit more. Neighborhood Ventures is perfect example of this. Good operators who work with good property managers, have their own in-house labor, and are looking for assets in good locations that they know they can really drive the rents. Because there really is a scarcity for housing right now, and especially if you can find a good deal right now, because prices are dropping a little bit, and there are still some good deals to be had for sure.
Yeah, and that's the kind of the formula that gets confusing and a little complicated. Is the price to buy a property is more now because you're having to pay a higher interest rate, but if you're managing or looking at buying an apartment, the rents have also increased 20% in the last year. So CPI is up 9% in the last year. Rents are outpacing that, and that's because the cost of the comparable to a rent buying a home is also gone way up.
Exactly.
Because interest rates go up and pushes that up. So that's why rents have been moved up so much, is because the substitute for renting an apartment is buying a home. And if you buy a home right now, it's very expensive. The affordability gap between buying a home and renting has increased a lot. It's $1,000 as of last month. That if you were to buy a home or a townhouse that's equivalent to renting, it's $1,000 more to do that with today's rates.
I have other things to do with $1,000.
Right. And that's why people will continue to rent, and that's why multifamily continues to perform well. But it does move things. And the other thing that I look at as a apartment owner is, if I buy an apartment now at a 5.5 or 6, and I can lock in that rate for a period of time, where will rates be in a couple of years? Am I better off buying now and locking it? Are rates going to move up? Are they going to move down? And I think that rates at 6 are still can make a lot of sense. And rates may be higher later, so I'd rather buy at a rate right now and get that and lock that in for a period of time. And that's kind of a good transition. So we also talk about Barcadia, which is a big multifamily and commercial real estate agency across the U.S. Released the survey. So they did a survey of people like Mitch who work within their company about where they see the multifamily market going. Their survey of over 100 of the people who work there said that despite rising interest rates, because of the rents that are increasing, multifamily demand is still looking really strong going forward.
So you'll still be employed, Mitch. Don't worry.
Hopefully, yeah.
You are safe.
Yes, I feel secure right now.
Yeah, and that's and you are in a good market as well. So they said that in the Southeast, that's seeing the biggest increase in demand from people looking to buy a building. The West in general saw some of the biggest increases over the last couple of years. Yeah. And so that's the area where they're seeing a little bit of a drop off. Midwest is pretty stable as it often is. But overall, because of what they pointed out is the increase in people who are going to be renters for a period of time, longer term renters, that market is expected to continue to do well, and that there'll be people looking to buy apartment buildings.
Because it's primarily millennials, right? And that's the biggest generation, and they just keep coming, and they want to live in apartments.
Yeah. And I think seasonality plays into, I think Phoenix has gotten some bad press, but I think it's an outlier to most of the states out in the West. But I mean, the seasonality of Phoenix, I mean, you guys know how hot it gets out here. And so the past couple of months, we've seen rents drop a little bit, vacancies drop a little bit. And I think that's due to the seasonality. So
it just separates out the week.
Yeah.
That's how we do it.
Well, if you move to Arizona, once you get through a summer, now you've earned your stripes.
You're a Phoenician.
Yes, you've earned your pinstripes.
But we all know those people who move here in September, October, and they're like, "Wow, this place is amazing."
Well, they come to visit their relatives at Christmas, and they're like, "Oh, this is amazing."
No, they come during the right times of the year.
Yeah, they're like, "I hate the snow," and then they go home, pack up, and come in the summer, and
the summer is is
And they gotta prove
not for
themselves.
them. Yeah.
And we see that with vacancies as well. So vacancy rates rise a little bit, but
Yeah.
Q4 things start cooling down. People
When
are going
people
to come
can
back.
golf again.
People,
Yeah,
yes,
golf.
exactly.
You don't want to be leasing up a building in the middle of the summer in Arizona. So if you have a a new build 200, 300 unit building, you don't want to launch that in June. Sometimes you don't have control over it. If the timing works out that way, it's kind of hurts a little bit. But most property managers are trying to delay so that they can start leasing up in mid-August when the students come back to ASU, September, first of the year, January, when people are coming and they're in town for the Super Bowl or all the other activities and they want to stay and get a second residence here, or they end up staying longer. So people who have been here for a while were pretty used to it. Now we're starting to see that the traffic is picking up here again.
Yes.
And so we know
commute is longer.
how it works. So the other topic is, with the folks who are moving here, we know a lot of them do come from California. What's happened is it's increased the incomes of the people who are living next door to us. So the
Come
title
with
of
their California money.
yes,
Yes.
title of this one article from Phoenix Business Journal is that your neighbor makes more money than you think.
Yes.
And we don't know. It's not polite to ask.
You should,
Although
though.
Heather, you do ask everybody.
I believe in transparency. You knock on their door. Yeah.
I haven't gotten that question from Heather. Thank you.
I won't
you
ask
will.
on there.
Although I can't ask anybody's age. Can't do that, but you can definitely ask their income, right?
I'm 18.
That seems to be more appropriate nowadays.
So we don't ask people's income, but it's likely the people who have moved in, who came from California, came from some of these markets, their incomes are higher than what a typical income in Arizona was.
Yes.
Incomes are moving up in general, but kind of want to talk about how does that impact things, because they probably have some more discretionary capital available, and just to
Which
kind
is
of
great for our businesses, right? Like
Yeah.
it's funding our businesses here and it's putting money into the economy, and that's great. But then
we want to see incomes increase. So in 2020, at the end of the pandemic year, the average or the median household income in Maricopa County was $72,000. Now the average of the newcomers' income is $79,000.
Wow.
So it's 7%, 10% higher income. May not seem like a lot, but it ends up being quite a bit.
Yeah.
And then the other part of this is that the millennials and wealthy millennials are having a lot to do with this. So millennials are like 25 to actually more like 20 to 40-ish. There was a study also done by the Phoenix Business Journal that people under 35 that are earning at least $100,000 in gross income, that there's 1,400 of those net gain in Arizona in the last year. And so that's actually a lot of
single?
people.
Is my question. Where are they? Is that in the report?
That's a good thing for the
Yes.
dating pool.
Right?
Yeah,
Ladies,
you wouldn't
raise your
necessarily think
standards.
about that, but
Yes.
yeah, I'll keep my ear to the ground for you.
Good job. You remain employed again.
One of the things about Arizona is it's one of the criticisms around people who are just graduating college is you don't really think of, okay, I'm going to move to Arizona and go work at a cool company like you do some of these other markets, LA, San Francisco, New York, Boston, East Coast markets, Texas now. But that's one thing I wanted to ask you, Mitch. So you went to Arizona State.
Yeah, grew up
you
here.
Stayed here.
Mhm.
You're doing something that's kind of entrepreneurial in commercial real estate. So you didn't go get a corporate job, so to speak.
No, I didn't get a corporate job. And I knew coming home, as mentioned, I was teaching English overseas and came back with very little money in my pocket. Moved in with my parents. They were very gracious to let me do so. And starting up a job where I'm going to be making, it's commission based. And so I thought about the potential of possibly moving, but I also wanted that flexibility. But I knew that Phoenix was just so much more affordable than some of the cities that I wanted to go to. And I had some friends in some of those cities, LA, New York, and out in Texas and Dallas. And so it made a lot of sense for me to stay here, especially with given the real estate market. But I think that's a specific draw to Phoenix is that it's affordable in comparison. And so instead of these kids graduating from college and moving to these bigger cities, it makes more financial sense to stay here, especially with the abundant opportunities that we're seeing and a bunch of job growth and Phoenix, affordable now. We'll see how long that
And your
lasts.
parents are here.
And my parents are here. My mom loves that I'm still here.
Yes.
That was
My
the
dad doesn't
right
really care,
choice.
but my mom loves that I'm here.
So how do you think has the way Phoenix is viewed and staying in Arizona for that age group, has that shifted at all in the last 5-10 years with the people that you talk with, or is it kind of still like?
I think it shifted a little bit. I mean, like compare it to most other cities, like compare it to Chicago, New York, LA, very different. How many years we're behind? Decades probably, like in comparison to maybe the draw. But the affordability aspect, there's still plenty of things that you can do out here. We have mountains, which is
We
which
got
are great.
recreation.
Yeah,
I mean, some people
absolutely.
like that.
Some people like that. Actually, a lot of people don't. But I mean, you have entertainment districts in downtown and Scottsdale, and so
And they're
there
getting
is
better,
a draw. And
right?
they are
The
getting better.
downtown
As a
is
person
getting
that was
better.
born here, I can tell you that we have come so far.
Yeah.
It is so much better.
And
You're welcome.
And thank you. And there's new capital that's seeing that as well. And so they're coming, investors from out of state are coming and they're building these new entertainment districts. And Tempe, I think, is one of the most awesome submarkets that I've seen within the past few years, and as far as what they're doing in the new development and some of the things that they're putting together. So
Where's kind of the cool place to live for like your age group? Because it was always kind of Scottsdale. Is there some migration toward downtown or midtown?
Yeah. I think closer in like that Arcadia Light to like midtown type of area, even uptown where we're at right now. Bunch of new bars and restaurants. I mean, you're always super close to the airport, highways. So yeah, no, I think there's a couple different areas that are really up and coming, one of which is downtown. Roosevelt Row is awesome. Just speaking locally, love that place. Champaign Lanes is awesome. Uptown Phoenix, the Biltmore, and Arcadia Light for the most part. And I'm 28 years old. For the most part,
Now
that's
you're
where.
bragging.
Yeah, now I'm bragging, and I want you guys to know that. I want everybody to know that. But for the most part, that's like my cohort of friends. We've kind of moved out of that Scottsdale Old Town type of scene and entertainment district.
So you're going to go from Tempe. Then when your senior year at ASU, you start kind of hanging out in Scottsdale for a couple years, but then you're kind of like 25, 26, you start getting a little bit to more of the central Phoenix area, maybe closer.
You want a little bit more
Got
culture than.
And I remember when Roosevelt Row was new, and they were doing the first Friday art walks there, and they were really starting to put these very like indie little businesses, and it's like the cool place to be.
Yeah, exactly. Yeah. You want to be there, and there's a draw to it. So,
and at the same time, some of these other big cities. New York, where I lived after school, Chicago. There's some problems happening in those cities that are not necessarily new, but I think the idea that after you graduate, you go live in a big city, there is some appeal to that, and you just kind of have that experience. That's not Phoenix necessarily, but it is for somebody who's not from here. If you're from the Intermountain West, or if you're from the Midwest, actually Phoenix is a new experience for you. And I see a lot of that, people who grew up in the Midwest and they come here to school, they stay here. And that's their new experience. Where if you're from here, there might be a draw to go to one of those big cities. But I think
you always come back.
That's what the parents count on, right? And it's big. It's a big enough place where you can live close to your family, but you're not right around the corner from your mom and dad, right?
No, I literally am.
You live at home?
No.
You don't live at home.
No, I live not too far, but just far enough.
Yes, exactly.
No, I bought a house like 3 minutes away. Yeah. That was on purpose. They can't get rid of me.
And I mean, when it comes to where you want to invest, you want to be on the up and coming. That's what I've seen so much around whatever investment. And it doesn't mean it's a linear line like straight up. That's actually can be scary if it feels like that. But the things that are happening here in Phoenix, and there's some problems here too with water, with climate change and other things, but overall it's moving in the right direction. So that's why it's an area we still really like. So I want to shift to another topic, an article out on Planet Money about some tips around investing. And one takeaway I had was from this article was they said, as you get closer to retirement, you should probably put less and less of your capital in the stock market. The reason is the stock market is volatile as we're seeing right now. There's been a big pullback in the last this whole year really in 2022 to the stock market. And there are a lot of people who lost capital there, lost gains, and they're actually doing the smart thing, which is they aren't selling. Because what people tend to do is, oh, the market's down 20%, I'm going to sell. And now you're selling at a really low value. And so they're staying there. And so what we're seeing a little bit with capital in general is money's just kind of a little frozen because people don't want to sell right now. They want to wait till it potentially comes back up, and then they want to sell, and they're like, okay, get me out of the roller coaster a little bit. But there are also some people that need to make some moves just because they're at that stage in their life where they need to be pulling money out of the stock market. And this formula was, if you take 100 and subtract your age, whatever the difference is, that's about how much as a percent of your wealth should be in the stock market.
I feel like you have to disclose your real age then. And that's... Like this
well, okay, so
ageist.
let's use Heather as an example. Okay, so
I am timeless.
100 minus 35.
Bless your heart.
You should have 65% of your capital in the stock market.
I gambled once at 21, $20 in Vegas, and I'm still bitter over losing that $20. So I am terrified of the stock market. So that probably won't happen.
Well, and I'm with you. I don't have any money in the stock market, and I worked in the stock market for 5 years. I don't like it. Part of it's because I've really liked real estate the last few years, and I probably I will diversify at some point, but I'm still hesitant. Right now is probably not a bad time to put some money in the stock market, but I'm just, I'm with you. But for most people, so Mitch is 28, so
you have time to
he
mess
should
up
have
a little.
72%.
Yes, I guess so. That's what I keep hearing.
72% in the stock market.
Yeah, definitely don't. Definitely don't have that. Definitely don't.
That's kind of for people who don't understand real estate and some of the benefits with investing in real estate. I mean, you can get really good gains. And so this is kind of general information for folks. The other thing, so even if it is 60% or 50%, then the rest of it needs to be somewhere else. And most of our investors end up putting 10 to 20% of their net worth into commercial real estate as just to diversify their overall portfolio. So that's one thing. If you're going to go meet with a financial advisor, they're going to talk to you about. And then I also wanted to talk about the difference in investing with real estate for income or cash flow versus appreciation or growth, and why you'd want to do one or the other. And kind of, Mitch, how do you see that?
Yeah, no, I think it's interesting. I think these past couple of years was a really good example of investors that had that appreciation type of mindset, really showing their colors and coming out. I mean,
they're banking on the property going from here to here.
Yeah, exactly. I mean, they would buy a property and then, a couple months later they'd sell it for, a healthy profit. And we worked with a bunch of guys like that. And so we're making a lot of sales doing that. It's not necessarily the best investment strategy. But I think for others, and this is the way that I look, the lens that I look through, buy a property, make sure you're operating it properly, have your team put together, and reap the benefits of that cash flow. And so, whether that's for your retirement, if you just want to save a little extra money, or if you have, whatever it is, for mom and pop, non-savvy operator, maybe that's your lifestyle, and that's the way that you live off of that income. And so that's kind of the lens that I look through, and it makes a lot of sense to me.
Yeah, if you buy a property, or if you invest in a property like folks do with us, the goal should be to have that property generate cash flow, because it gives you options. So if you fill it up and you have good tenants, good residents, or if it's short-term rental and you figure out the operations, you do a good job with that, and it starts paying you monthly checks, someone is always going to want to buy it. And
it's probably worth more than when you bought it. And there's your appreciation as well.
Yeah. And over time, real estate does good, continues to move up in value. It's an asset that there's a limited amount of real estate available, especially in good locations, right? So if you can start getting cash flow, and that's why people also like to invest in projects and funds that generate cash flow, because that means the properties that they have are essentially a business that are just spitting out profits, and people are always going to want to buy that, right? So there are some.
It's nice to be wanted. Yeah.
Yeah, and that's with investing as well. And
I'm worried about the building's feelings. So this is
So there's people who buy land.
Yeah.
It doesn't generate any cash flow. They're hoping they can resell it for more. That's similar to the stock market. The stock market doesn't pay you a dividend. There's very few stocks that pay dividends. There's some, but the majority of them don't pay dividends, and if they do, they're not very much. In real estate, that's kind of like buying land. you just sit on it and you're hoping that you buy this piece of land in an area, and at some point the path of progress is going to hit it, and now you can sell it for more.
Yeah.
We don't do that, and I think that the point of this article is that investing for income is definitely lower risk, because you start to get that income, and then when you own an asset that's generating income, you can always sell it.
No, I fully agree, and I think with the way that you guys purchase property, I mean, you do that. You're buying the path of progress. We were talking about it before the show, and so you are still getting that appreciation, but at the same time, you're operating the property, and it's spitting out cash flow and passive income. So you're kind of getting the best of both worlds.
A little bit of blend.
Yeah, a little bit of a blend there.
A little bit of blend. We weigh ourselves more heavily on the income side. Like, let's get this thing.
Right.
We might do some renovations here, but let's get this thing operating.
Yeah.
And generating income as soon as we can.
Yep.
So
Everything else is a bonus after that. Yeah.